And good morning, everyone, and welcome back to NeelyFX. My name is Michael Neely, and this is the channel where I talk about foreign exchange trading, prop firm trading, building expert advisors for the MetaTrader 4, MetaTrader 5 platforms, and just in general, becoming a better trader. And with what I learn, I go ahead and share it with you, and then you can become a better trader if you so desire. There is a lot of work that goes into trading behind the scenes. It's not just looking at the charts and flipping a coin and see what happens. Because either you got to buy or sell. You could buy or sell or not participate. There's a third margin, so you can't get the coin to land on its side, so you got to figure out what's going on. So with that, let's go ahead and go on. It is Sunday, July the 19th, 2026. It's time for the weekly Forex look ahead. We're going to take a look at possible trends and stuff going on. It's kind of hard to predict trends right now with the unpredictability of the U.S.-Iran conflict right now, which is placing a huge toll on world inflation fears and world inflation facts, because the facts are different from fears, and you got to figure out which ones people are trading on. Most of the time, they're trading on emotion. So most of the time, they're trading on fears. But at any rate, with that, let's go ahead and get into the risk disclosure, because we are talking about making money in the markets. We're also talking about avoiding losing money in the markets, and that's called risk, and you need to know about it. Goes like this. This channel is for educational and entertainment purposes only and does not constitute trading or financial advice. I'm a professional trader, not a broker, trading my own capital. I do not solicit funds, manage client accounts, nor do I hold CFTC or NFA registration at this time. I have held NFA registration in the past. About 20 years ago. Forex trading is highly speculative with a high risk of losing some or all of your investment capital. Only trade the funds you can comfortably afford to lose. Actually, it's more than 20 years ago now that I think about it. CFTC risk disclosure. Forex trading carries a high degree of risk and may not be suitable for all investors. The high degree of leverage can work against you as well as for you. Before trading Forex, consider your investment objectives, experience, and risk appetite. You could sustain a loss of some or all of your investment capital. That is exactly what we're trying to avoid. So with that, let's go ahead and let's talk about me some more. These are the two. I'm beginning to feel a little sheepish about my EAs because it's one, they're not, no one, they're just really downloading them with any great enthusiasm. I don't think this is a new concept. Matter of fact, I know it's not a new concept because I didn't make it up. I got that concept from somewhere else and then built EAs around them. So we have the MetaTrader version, Mean Reversion Pro for MT4 and MT5 right there. I got a couple downloads on those. I haven't really promoted them yet, but I have gotten more into EA development, as you can see right here. This is the one I'm just recently showing. So I discovered Forge at MQL5, Algo Forge at MQL5 recently, and I'm not really building anything. It's really I'm not bringing in any AI predictive models or anything like predictive libraries or anything like that. I'm just building out straight EA so I can better understand how to trade. Because we also have platforms like this. Let's see if I can get into it without having to do my password, but I know it's not true. So let's go here and go dxtrade.alchemymarkets.eu, which is a European outfit with FXify, based out of London. And EX, there it is. And you cannot see me getting my password because it's on a different screen. And you guessed it, my password is 8 asterisks. Most common password in the world. Oh, well, because then that leaves me with things like this, where I have to be able to trade the markets manually. This is my, This is my Forex trading challenge. Let's see if it's hasn't finished downloading yet. Oh, that's the latest one. And these are all demo accounts, by the way. So I selected the accounts. Boy, the server on there is working really slowly. This is the only site lately that is really difficult to trade. As you can see, we're still in the game. Mind you, just barely. I think I've got a 2% drawdown on this account right now. The 4% drawdown is a limit where I blow the account. A 3% drawdown. Oh no, that's not good. Let's see. So 3% drawdown. Is that really sure? let's go ahead and go over here and go to my FXify account. Let's see how close I am to blowing this account. Should pull this up already, but it's, I don't think about these things. And today's World Cup finals. It's the reason I've got Spain and Argentina going back and forth right there. The two colors and the two things. Put the right thing in there, didn't I? Yeah, it looks like it. Go faster. What? I got anything drawing this down? Close out a couple of things real quick. Close that out. Don't have that running. Don't have those servers running. Don't have that running. Close this out. No, stop it. Better yet. Okay, done. Okay, let's clean all those. Oh, not now. Can't do that right now because I'm in the middle of a video. All right, let's stop this and start all over again. Bad gateway. Well, okay, we're not going to do that now. Oh, they're based on WordPress? Wow. Their FXify is also running on what I'm trying to think of the platform. I used to be on it. WP Engine is what they're on. And WP Engine is showing a that's not good. But at any rate, I have no idea where I stand on this. I think I've got a 4% drawdown, but I'm not sure. So I've got a 3% drawdown left. 3% of the drawdown is there, which that's not good. Let's come over here. Since we can't access their site because WP Engine is messing up. So with that, let's come to my trade history. Yep, I am down about 148. I thought 400 was my limit. Oh well. Max drawdown, win rate 33%. Return. No, we don't know what it is. And they're not FXify is offline. How about that? Oh well, so I cannot access FXify. That's not really good good advertising for them, but that's okay. Maybe they'll get their stuff together. I would put the blame on WP Engine because I was having problems with them with my website, so I got off of WP Engine. But anyway, that's immaterial. Let's go forward. So we've almost blown this account, but we haven't done it yet. But we do have EAs to talk about that. So let's talk about dashboard. Let's talk about tradingforexforprofit.com. This is my website. This is where the website I'm building. In January, I had some time off and got to thinking about it, and started thinking, what would I want as a trading platform, something to help me trade better? And this is it. And every time I come in here and show it, I think of other things that need to add and other things we need to tweak. Like the journal for missed trades, adding missed trades to the journal too. So that would give you an idea of where places where you're kicking yourself, saying that would have been a 50 pip win, and instead you decide not to trade, which would be the reason why you address your feelings. Because trading really is just about dealing with you and your feelings, not the market. The market doesn't care if you live or die. But your feelings regarding the market and regarding the trade is everything. So that's really what we're trying to help here, is help traders get better into their trading by reviewing what they did, why they did it, and at the time, and to also get better ideas of what's going on. Right now, this is pretty much just showing you what your broker is telling you, which is not the whole story, because you've got mixed trades in there too. You've got this. You can add things in here like that. You can also add a trade here manually. Add a planned trade and run it through the regime of planned trades to open trades to closed trades. We'll also need to get one in there for missed trades. That will be coming possibly by the end of the day. Who knows? We've got imported trades right there by CSV. And then we have performance. You can see what your account performance is. You can see that number's not the same. I think it's worse. Actually, I've got a pretty good, pretty healthy win rate, but as you can tell, I hold on to my losers a lot longer than I hold on to my winners, which is not a good idea. That's not how you trade well. But that's those numbers also go back to 2023, so I've got a lot of work to do to overcome that. So you can add your strategies here. As you can see, I've got two of them. Impulse, which is where you're just watching the charts and you see something, you just jump in with both feet, and that's not how to do it. Notice it says to be avoided. That is my biggest downfall right there. Is I see something and I think I'm smarter than the markets, and I come in and make a losing trade. Right now, I'm trying to do a trying to pick up the floor, basically, of where the pound versus the yen could be bouncing back. And right now I missed at a 78% pullback, but I think or 61% pullback. We'll see if it actually hits that later on today. It might. Who knows? News. I've got the new and improved news news posts right here. So you can see the Bank of Japan said stuff. So this is new and improved and a lot better than it was yesterday, because I just made these changes this morning. Economic calendar is working on. We're working on that. We're going to need that in a minute, but we don't need it now. Pairs. These are all the pairs we've got going on, and their closing prices for Friday. And then we have billing right down here, settings, so we don't need to look at that. We can come on for free and kick it around, try it out, bring in one account and see if you like it. And then we also have the Pro version right here. You can upgrade to Pro with unlimited accounts. The way that you come in for free is that you come in and delete the account that's in there, and then you can add your account information, whether it be a $10,000 account or a $500 account. No one else can see this but you. So this is not, you're not sharing your account information with everybody. We're not running a leaderboard or anything like that. That's for what brokers do. That's not, and I'm not a broker. But with that, let's go ahead and go back to the public site, and then we'll take a look and see what our market calendar is for this next week. Sunday, look, it's a Japanese bank holiday, so they will not be opening today. I don't think. Maybe, who knows? At 8 p.m. tonight, because 8 p.m. tonight Sunday time is 9 p.m. Is 9 o'clock there in the morning on Monday. So we may not be running that. Who knows? We also have common CPI for Canada, inflation information for Canada, a whole bunch of trading and a whole bunch of inflation information for Canada. So that'll be interesting. Let's see if they're also deflating a little bit. Average earnings index, 3 months to a year. Claimant accounts, that's the unemployment rate, if I'm not mistaken. It has to do with unemployment. Then we have CPI for inflation information for Britain coming out on Wednesday, along with employment change for Australia, employment rate for Australia, head of job status. That's what that job post is all about. Thursday, we have the main financing rate for Euro, for the Eurozone, and monetary policy for the Eurozone, and then the nothing burger called unemployment claims for the United States, and then the ECB press conference. And then on Friday, got some stuff coming on Friday. It looks like we have manufacturing and services PMI coming out for Europe. A whole bunch of it. How about that? So that'll be interesting for Europe and Great Britain, considering Great Britain is financially not a part of Europe anymore. It is technically, but it's they run by the pound, not by the euro. Brexit did that, which is fine. Let's see. So with that, let's go ahead and get into what we're going to be talking about today. Let's look at some charts. These are weekly charts, by the way. These are not weekly charts. And change that. There we go. That looks better. Okay, so we've got some stuff to talk about. I can't get MACD to work, but that's okay. I can, but I just have to pull it down like this. There we go. Now we've got MACD working. We have Bitcoin. Let's start off with Bitcoin. Bitcoin is not banging it out lately. It looks very, very bearish to me, especially when you look at MACD and also RSI. It's way down, under 50 on both of those, and the MACD looks terrible. Way down there, so I would not get into Bitcoin right now if I were you. It does look like the weekly Bollinger Bands are starting to open up a little bit, so we might have some more money flow going into Bitcoin right now. I will not touch that. I don't trade crypto. Enough said. Let's get into, and I don't recommend you to either. It's just a bad idea if you ask me. We have the dollar 10-year yield right here on the weekly basis, and it is caught in this range right here, which has been going on since November of 2024, basically. It's broken out a couple of times to the downside, but hasn't really sustained because Congress can't stop spending, which also drives drives up inflation. So anytime you hear Congress coming up with an anti-inflation bill, it's just more spending. Let's see. Here we have, you can't spend money in order to save money. In order to reduce spending. It's stupid. It's worse than counterintuitive. It's stupid. I'm going to spend more money, so I spend less money. Nope. Doesn't work. Pound versus the yen. Right here at 2.7. Clean close at 2.7, by the way, on Friday, so that's interesting. But it is starting to come down a little bit, but still way up here. See this trend? I expect that trend to continue. It's probably going to hold off a little bit there. And that leads the question to what's going on with the carry trade. Let's look at another one too. Let's look at the British 10-year because I'm becoming very interested in the British pound versus the yen. And it is perking up. It's almost 5% for the 10-year bond yield in Great Britain, which indicates that we're going to have a much stronger carry trade for the British than the Americans. American is at 4.18, British is at 4.9, and that difference is still is going to be more here. So that's where we're going to see more of the carry trade taking place between the pound versus the yen versus the dollar versus the yen. That's why I think that the dollar versus the yen is cooling off. We'll get into that in just a minute. But right now we have the carry trade right here. These two lines are not crossing. Carry trade is not breaking down. But if we come up here to this one, well, that's showing how the American carry trade is going on. Might be a carry trade possibility going on between the Great British Pound. That's why it is, that's a matter of fact, that makes sense. That would be why the pound versus the yen is going harder than the euro versus the yen, which is the exact opposite. The yen is less than, so you would want to sell that. So at any rate, that might be what's going on with that interest rate difference. Now let's go back to where we were talking about. US 10-year. Let's go to British 10-year right here and Japanese 10-year. And that is a much wider difference. Oops. Did I do that right? Huh. For some reason it won't let go of the other one. 4.9%. Oh well. This number is much higher. Won't let go of the dollar. Of the US 10-year. Oh well, we won't worry about that. So with that, that's what we have going on there. The carry trade is not breaking down. The British pound versus the yen is a much larger carry trade possibility than the the dollar versus the Japanese yen. So enough of that. Let's keep going. With that, we're going to come down to the euro versus the pound. And the euro is starting to come back a little bit, but on the weekly level, it is way down. The pound is still higher than the euro right now, but not as bad as it has always been. February 25, it was all the way down here at 82. So we could see that again. Maybe not. But I see that might be coming down all the way down to 83.8. But that is still a very strong sell on that one, just by judged by the chart and the momentum that the selling has. So with that, let's go to the DXY. A whole bunch of stuff I have drawn on this chart. The war of Iran started here, and it is continuing to bolster a little bit. Still holding above 101, around 100. Slid off of 101 a little bit, came down to 101.75, but we don't see that. I don't see that changing anytime soon. In fact, it might be accelerating again, which would give us higher inflation, which nobody wants. Go back to the euro versus the dollar right there. 114.39, not at the very, very bottom of that range. So it might be time for a little turnaround trade, but that's, we're going to have to see a lot more things going on. We did not check and see what the Let's see what they're expected to do. Claimant count, unemployment rate, it's going to change. So they're expecting to hold. So with holding rates instead of cutting rates, if they're cut rates, it's going to make that even deeper. Have it coming down to 113.27. So they're got kind of a rate cutting bias to it, maybe, which might give it an opportunity to go even further south. But 111.9 is the next spot on that, so that might be an idea of place to go with that trade. Pound versus the yen, 134.54. Not slowing down there. That's hit some resistance right there, but I do see that going on further. Pound versus the Swissy. Wouldn't it be nice to see a breakout on this? 82 is the mark. We'll see if it can overcome the 2025 daily high close, which is back here in 2025. So we'll see if that can continue, and it would give it a push up to 84 would be the next spot, I would think. 83.8, somewhere around in that ballpark for the next upside on that. So that's quite the possibility. Dollar versus the yen keeps kind of struggling higher, but it's this is a weekly chart, so this is kind of a weak thing to do. Let's go ahead and take these off. We don't need those anymore. That was a long time ago. It's just cluttering up the page at this point. And we'll save that. Probably cost me more money. But at any rate, the 162.42 is where it is now. It's kind of at a high. Not really with any enthusiasm, but for the past 4 weeks hasn't really gone anywhere. By contrast, the pound versus the yen is quite enthusiastic. Going up to 218.47, did have a pullback, close to a 50% pullback on that, which is what I was watching over here. Go ahead and go in here, and we'll see the chart for the pound versus the yen. And my trade is right here, which I don't like that. That's a weird indicator that I found. This is a Fibonacci Bollinger Bands, which is kind of a weird little thing right here. And the 50% level is, let's see if I can figure out how to see the settings on that. So if I can just get straight Fibos. No, I don't want that. Okay, well, we're going to do this differently. Close. Pull up the demo account. So over here, I think I have the same trade in there on the demo account, and that has the Bollinger Bands already in there, or Bollinger, yeah. Not Bollinger Bands, but Fibo levels. So this is where I originally had it pulling back, and I've missed the pullback twice. So again, this is like catching falling knives. I do not recommend this as a trading strategy. This is hard to do. But if I had, my original thought was to catch it about here, the 23 level, and that did not work out well. That cost me money, and I lost on that trade, and then I lost on one more trade. Where I entered at 217.38. Order history. Let's look at my order history. So I had a buy limit at 28.82. That gave me the loss there, and then I think I did the same thing again, 28.80. And both of those trades did not go well. So then I came down to 217.82, another 100 pips lower, to see if it would hit that level. And that coincides with the 61, just of hitting the 61.8%, which I'm finding is statistically the sweet spot for the pound versus the yen. But the 50% spot is also a sweet spot for the pound versus the yen on Fibo pullbacks. So we'll see if that retraces all the way back down to 61.8. It might. You never can tell, because all these other little movements are other Fibonacci levels of other Fibonacci levels, and it just goes on ad infinitum, because as the larger algo models trade the markets. So that's what we're trying to do there. But at any rate, let's go back over here and keep going. Euro versus the yen. 177.87, pretty flat. Canada versus the yen, perking up because of the oil trade, I think. Well, Canada is a big oil producer. Japan imports 100% of their oil. Prices of oil is going up, so that would cause that to go up higher too. Aussie versus the yen. One of my new little favorites I'm working with, and for good reason, because if I had been paying attention back in April 2025, would be in the middle of a big bull market right now. Just take a little breather. And I'm also researching this market too, doing research on it first to see what numbers we can come up with, and then we'll go from there. Have the oil. NYMEX crude oil spot, 81.78. Perking up hard, closed over 81 Friday because it's just the bombing is continuing. They're starting to retaliate. They, I think, they've actually killed a couple of our guys. So that's will not bode well for them, as we tend to seek vengeance on that. As the United States has tended to seek vengeance on that, and that's just warrior mentality. That's the way it works. 82.78. We'll see if that goes higher and causes predominantly more U.S. inflation or worldwide inflation, or whether or not we could stop that. Dollar versus the Canadian dollar, the Kiwi, as it were, topped out right there at 142.28. I might want to call that a weekly high close for June 2026, because that might be a significant level. It turned pretty briskly on that. So that 142 almost spot. 142.07 was the market on that. Let's go ahead and do that. That's looking like a very significant spot. But then again, they're all significant. But if you draw too many lines and make too many significant things, then it just jumbles up everything. We'll go with 2026 weekly high close. Okay, so that could be something to take a look at with the dollar versus the Canadian. Aussie versus the dollar right here. 69.39, still not being able to break 70 again. So we'll see if I can overcome this little spot of resistance and get back over 70 again, and then that might be a spot to come in on that. Who knows? Gold holding its own at 4,000, holding the 4,000 spot at 4,017. Platinum, 116.12. Pretty static. Palladium, not really going anywhere anytime soon. Silver, just going down. Next weekly resistance level is probably going to be 52. Daily resistance level will be 53, 54. So it's going to be a lot of resistance between now and 52. And then below that, it'll be 49. 48.5. Breaks 48.5. It might be something to talk about. Breaks 45, and it is a definite buy. Silver is one of my favorites. I love buying silver, and I will buy some more. Enough said. I buy physicals, so we have things like this. That's what I like, are the coins. So teach your own. Let's see, IGV. Do we need to talk about this really? Looking like it's perking up a little bit, but on the weekly chart, it's got a lot of up and down, but it's still settling about the same spot, about 92.68. HubSpot weekly chart is perking up a little bit. Salesforce, perking up a little bit. Intuit, a little bit. More of a perk up. GoDaddy. Adobe. And Upwork. Oh, did I say Upwork up here? This is Intuit. This is accounting software. Intuit. And let's look at the weekly electricity bills. Your electricity bills are going up. The end. Especially if that's why everyone's talking about data centers. It's because data centers are going to put a huge load and a huge strain on the. Look at this MACD. This MACD's off the charts for electricity since basically August of 2021. So that's we're going to see a lot more of that as the AI economy either falters or goes harder, doubles down on their stuff. The MAGS ETF saw finished Friday off a little bit. It's a red candle for the whole week though. Google coming off for the second week in a row. Amazon perking up for the second week in a row. I know it was down on Friday, but it's for the week it's up. Apple, well, look at that, going to the moon, so to speak. Not really, but it might be. It's about a 50% level right there. 50% retrace on that. Speaking technicals on that, Meta, Facebook, $646 for a share. I'm not buying that, but it's something to, it's kind of in there somewhere. I don't even know what to say about that. Microsoft, again, I don't know why it's in the Mag 7, but it is. Nvidia, I guess market cap may be playing a large role in this. Nvidia is coming off, had a fairly bad week. I mean, it's not the worst week it's ever had, but it is getting a lot choppier. Tesla is down on the week also, big time. And SpaceX, yeah, not doing so hot. I do want to take a look at the NASDAQ real quick, just see what's going on up there. So I do have the NDQ right here, and it is was off for the week bigly, off 433 just on Saturday, or just on Friday alone. It's going to give it off 1200 for the week. Dow Jones off 490 for the week, and S&P 500 right there off 117 for the week. So it's a bad week for stocks, so to speak. So it's not one of these areas right here, 2025, and it certainly isn't one of these levels back here in 20. Where's 2020? Where's the NASDAQ for 2020? Might give us some insights what's going on here. Now look at those gaps. Wow. That was the crazy selling that was going on because of the common cold that was the COVID virus. Yeah, I said it. Dow Jones, wow, that's a mess. Weekly chart on that. That was just a complete, almost capitulation right there, but it recovered pretty quickly. Recovered by November. Everybody got their stuff back in a row again. But we could be looking for something like that again. Look at these chops. Big chop here, and again right there. So we could see another one of those coming up, and I know a lot of people on social media are saying it's going to go to zero or something like that. That's not going to go that hard. But at any rate, there will be a lot of interesting things going on with the AI market to see if it can be continued, because it is computationally and electronically limiting, just like Bitcoin is. So we'll see if that what happens with that. So with that is all I've got for today. Hope you enjoyed the video. Stay tuned. By the way, if you can catch Michael Boutros's video on the weekly technical analysis coming up tomorrow morning at 8:30 a.m. Eastern time. It's a great video. He's a great technician. I've been watching him for a good 10 years or so. Been watching him for a lot of time. But he's a great guy and also a great technician. He can possibly teach you some things about trading because manually it all comes down to manual trading too. I don't see how you can, as I'm doing more research onto EAs, I'm seeing that you have to know something about EAs to trade success. I mean, you need to know something about manual trading first before you can make the EA successful. So with that, that is all I've got for today. You guys have a great one. If you like the video, hit the thumbs up button. If you want to see more videos, then subscribe to the channel. And if you want to talk to me directly, hit me up in the commentary section. We'll also be in Florida this week. We'll be out of the office from Tuesday to Saturday. So then we'll be back next week with next week's weekly look ahead. So you guys have a great one. I'll talk to you later. Bye.